The big beautiful bill was dense. There's a lot in there and there's a lot to cover on that alone. But the most important thing for the purpose of our community is to identify the opportunities that both sides of the aisle placed in this bill that you can take advantage of for your own investing and for your own strategy. One of the biggest opportunities that we saw is none other than opportunity zones. So, what is an opportunity zone? An opportunity zone, that definition came about in the 2017 Tax Cuts and Jobs Act that Trump did during his first term. What we saw during that period of time is the government wanted investors, so private capital, to be investing into zones that are underdeveloped or need revitalization or really kind of just need outside dollars to get them up to speed and to do a once over on the entire area and boost that local economy and have a fresh start there. What we saw was pretty spectacular. Over $120 billion from the private investment sector was invested into these opportunity zones, basically doing the government's work for them. So why would these investors do that other than the government wants them to, right? Well, when we talk about tax cuts or tax breaks, et cetera, that's kind of a mixed term that's not fully accurate. What a tax break is at its core is directing money, in this case from the private sector, to a project or goal that the government outlines, and in exchange, the government gives a tax break to investors for that. In this case, in the big beautiful bill, what it did was take this opportunity zone project that started in 2017 and make it permanent. So now investors can take the same opportunity zones, invest in those, and have massive tax benefits in the foreseeable future. So what tax benefits are investors getting using this opportunity zone strategy? They can now reduce, eliminate, defer, etc., their capital gains that they receive on these investments going up in value. That's huge, okay? Real estate already has the advantage of appreciation. It already has the advantage of cash flow in most projects, but now there's a massive tax component with multiple strategies to utilize that in the big beautiful bill. So it makes real estate investment, investing in projects the government wants you to support the economy and change areas for the positive, it now gives those investors a huge incentive to do so. So there's a lot of notes here and there's a lot of benefits to investors specifically, but we'll go over a couple of the most important. The number one is that investors can now reinvest their gains over and over and over and have the benefit of a 5-year rolling deferral. So that's one way to just kick that tax can further and further down the road by doing what the government wants you to. The next, and possibly the biggest takeaway for investors out of this entire opportunity zone strategy, is the opportunity to have 100% written off for capital gains after 10 years in that project. So there's a big time period expectation there. You got to invest for over 10 years in this project, along with some hurdles of how much you need to invest, etc. But you can get 100% tax write-off here. So this opportunity zone piece that is now solidified, that's codified, it's now permanent, is a huge long-term strategy for investors that want to use this and really boost up a local area. So what areas will qualify for being an opportunity zone as the big beautiful bill defines it? Well, that is something that is set on a 10-year basis by the government. Every 10 years, they will reassess which areas should be considered opportunity zones. But here's the big takeaway, generally speaking. They're targeting about 90% of opportunity zones to be in rural areas. So the goal is to really, truly build out areas that are not built out at all. This should expand and create cities and growth in areas that normally would not have that benefit at all, and really no incentive to do so. You typically see real estate investors want to invest where it's already working, where they can make money today. But thinking out ahead, seeing these opportunity zones, and then the government saying where they want those dollars to go now gives investors a laser focus on those areas where they should be putting money and getting big tax deferrals and tax benefits. So what do the numbers say? When you dig into the numbers and we dig into the expectations of what these projects should do, what are those numbers behind it? The analysts project between 10 and 15 billion invested into these opportunity zones annually moving forward in order for investors to benefit from these tax savings. That's huge. 10 to 15 billion going to areas that need development more than ever. And this is huge for which sectors are involved in this also. We're talking multifamily housing, we're talking retail, we're talking redevelopment, affordable housing, business startups, etc. There are so many key components that will really benefit from these investment dollars going to these areas and really create industries where there wouldn't have been previously. One of the biggest asset classes and opportunities that I see with all this coming together is without a doubt going to be warehousing and manufacturing. Why? Because these tertiary markets, these rural markets, typically have a lot of land, and now they're going to be in growing areas with more housing, etc. These up and coming areas can be the future of US manufacturing, US warehousing and distribution. I see this as a massive opportunity as our economy grows and shifts to more of a manufacturing base. So what are the takeaways here for investors? Number one, this opportunity zone strategy should create tax incentives for long-term, stable tax write-offs along with projects that are making a meaningful impact. Number two, this is especially an opportunity for real estate developers, for startup business owners and investors in the startup space, and for infrastructure investment to build out an area that doesn't have it already. And number three, investors should be looking for opportunity zone opportunities if they're looking at a time horizon that's 10 plus years and they're looking for massive tax savings on an investment in real estate particularly. So keep an eye on opportunity zones. We'll be covering a lot more strategy on investing moving forward. So we'll see you here. And then also check out our monthly webinars where we deep dive on strategies like these in depth with slides, with the data, and show you guys everything and wrap up with a little Q&A at the end. All right, see you soon.